Hey traders, welcome to another global macro update. We'll be going over a bunch of different markets, different asset classes in order to assess if we are in a risk on or risk off sentiment for this upcoming week. So the first thing we're going to be looking at for this video is we're going to be going over the equities. Now, if equities are going up, obviously that is a risk on sentiment because they are able to provide higher ROI compared to things like bonds, but they do have higher risk parameters associated with them. First index of the day we're going to be looking at is the S&P 500. This is a ticker called SPX 500 USD. It is the futures contract, so it is traded for longer than a normal stock market index. First thing we do want to look at on the 12-hour, made a lower high, and now it's pushing back down with this huge bearish engulfing candle, kind of kicking off the momentum to the downside, which was on the Friday right before the weekend. It puked on the Friday right before we actually closed on the market. So over the weekend, I'm sure a lot of people looked at that and definitely saw some little bit of sellers coming into the market. We haven't even been close to the recent low of around 29.77, but I do think that price is going to come down here. We already did look at this potential descending zone, and it did break initially, but it was a fake out, pushed to the upside, did not break the previous high, and then pushed right back down. And then this horizontal zone was the key area that I was looking to see the price pass in order for me to potentially look for some risk off situations and some shorts from our current area where we're now going to be probably testing as a new level of resistance around 3K, 3100. And then the next key level of support, like I've been talking about, is around 29.70. This is a major zone. It was a 61.8% fib level when we were going to the upside, and we retested multiple times before finally breaking through, and then we had our huge push. So 29.70 is going to be a major zone for the SPX that we need to see pass in order to have some momentum to the downside, in my personal opinion. But when we do look at some of the other indexes, there's a pretty good confluence where there's an ascending trend line along with a horizontal zone of support. So the SPX does look like it made a lower high. I think the path of least resistance hasn't changed from the last video, and I am looking to kind of look for trades where the SPX goes to the downside, a little bit of a risk-off sentiment move. People are going away from stocks, going to a little bit safer investments all around. We're going to quickly look at the Russell 2000 as well. This is for the small caps. And we can see it's a very well-respected ascending trend line that we can see have a confluence with this previous resistance is now going to be a new level of support. Also, we do see a nice head and shoulders here, which is a reversal pattern with the break neckline at around 1361, 1360. So the initial break is going to be at the ascending trend line where we're going to get some level of sell pressure, but the overall structure and the reversal will not be confirmed and validated until we see the break of the 1350 zone, in my personal opinion. Now, the Russell 2000 is not going to be the number one indicator we will look for risk on, risk off sentiment, but looking at the small caps does provide some indication as to the level of risk tolerance for the global investor. So we're squeezing right now, holding an ascending zone. I'd like to see if we are going to get and move to the downside, the price holds 1450, because that will guarantee that the head and shoulders will be complete. As long as we hold below 1450, the head and shoulders is still in play. If we break down below the zone, that would be breakout, and then if we look for a retest, that will be a really good opportunity if we're looking for shorts or if we're looking for any sort of risk off situation, because if this goes down, usually things like the US dollar and JPY do go up, and Aussie, New Zealand, stuff like that go down, and then crypto goes down if overall stock markets go down, because crypto is positively correlated with traditional indexes, Russell 2000, S&P 500, Dow Jones, and negatively correlated right now with safe havens like the US dollar and gold. US dollar is a safe haven for global investors for the short term. So that's my view of the Russell 2000. We're just in a squeeze right now. We'll see what the Monday and Tuesday bring for the overall market. Like I said before, we did have a pretty big fall on Friday. So over the weekend, definitely the bulls are looking at that huge red down day, thinking, oh my God, I don't really know what's going to be out for upcoming week. We just broke a key level of support on the S&P, so we do have more momentum to the downside, but I don't want to call it a total short, and we should really be looking for opportunities to the downside just yet. Let's look at the Nasdaq. This has been doing extremely well compared to a lot of the other indexes. It's probably been doing the best out of any other index that we're really covering right now. And we can see we're holding this ascending trend line. We've been holding ascending trend lines before and breaking them, and when we do break, we usually get some aggressive push to the downside, and this is the current ascending trend line that we have right now. So we see that we're basically near the high, and we're not really getting much movement to the downside here. Even the big Red Friday that we had to close off the end of the week last week did not really break the minor level of support. We see that after this huge major bullish candle we had on June 15th, we were able to hold the around $9,900 zone multiple times, with candle closures closing right at that zone, and the previous day opened high and then pushed down to the key level of support at around 99.67-ish. So that's going to be the major zone that I'd like to see break, and then if that breaks, we get right into the confluence zone, which is around 96.60. That's where we have the ascending zone and horizontal level of previous resistance, where we have the all-time high as well as a previous high. We broke out, retested for a new level of support, which then for me is giving an indication that this level is an extremely important level. If we do get the failure to make a higher high, and this is the second high, this is a nice double top, that if we break this breakout zone, that would confirm the double top as well as confirm the ascending trend line breakout, giving us a high probability situation to at least get some level of bearish momentum to come into the market. But I definitely, if you're looking to short any stock, the Nasdaq is not the one to short. It is absolutely booming, and I just think if you're trying to look to short anything, the Nasdaq is not the place to look. Look for things like the Russell 2000, which has not bounced back nearly as high as the S&P. The S&P is kind of the benchmark. You can look at the FTSE 100 as well, and we'll look at that in the next slide here, because we're going to be looking at some of the more global equities. And then this is the VIX. Not really a whole lot to talk about. This is just measuring the volatility within the S&P, which is slowly increasing. Usually when we see an increase in volatility, it means that is a risk off sentiment. There's not many situations where you get rising prices and the VIX to increase. Usually does not happen. Usually volatility only increases when it's in a massive bearish move where you're getting lots of volatility to the downside. Now we're going to go to the world equities here. First, looking at the FTSE 100. Like I said in the previous video, if you're looking to short anything, I think the FTSE is pretty weak compared to a lot of other indexes. Let's look at the 2-day. We saw a massive spike down, and when we're looking at things like the S&P, Nasdaq, they're near all-time highs. Nasdaq has broken the all-time highs, but you see the FTSE has not even. Let's just quickly pull up a fib and see what the actual retracement is. It's not even above the 50% at this point. It's using that 51% zone as a major level of resistance. I did draw a nice ascending channel there, where you get a series of higher lows and higher highs connected by two trend lines, and then you have this nice confluence zone where you have a previous resistance indicated by wicks, and then you hold for a new level of support multiple times, and that's going to be the major zone that I'd like to see break in order to see any sort of sell pressure coming into the market in terms of the FTSE. But overall, it is slowly climbing back up, and overall risk sentiment is looking like it is still a risk on sentiment. You do see a pretty big bounce here after the doji, which is an indecision in the market, and then this next candle really indicates the confidence from the buyers, pushing the price back up, right up against the support, really pushing it up, potentially making a higher high as long as things keep chugging along in the overall market. Now we're going to be quickly looking at the Japanese stock market. This is the Nikkei 225. We do see that we had an ascending wedge that did melt up to way above the key level of resistance right here. And now it's testing for a new level of support. We see this consolidation zone. And if we zoom back, we see it was a support and resistance multiple times. Hasn't reached the previous high, but it's definitely making an extremely aggressive push to the upside, retesting the previously validated resistance as a new level of support in confluence with the intersecting resistance and support of this ascending wedge zone, and we can see it's made a lower high, but overall we do not want to fight this market. It is pushing towards the upside, although we have seen the Japanese yen push up a little bit higher recently due to the sell-off that we have right here. But overall, if you're looking at since March, the Japanese yen has been extremely weak, as well as the US dollar. All right, now let's quickly look at the Australian stock market. This is the ASX 200. I'm just going to move this in a little way that makes it a little bit... Oh, that's not the one I'm looking to change. I'm looking to change this one to make it 12-hour, maybe even the 6-hour. I think that's a pretty good way to look at it. Now we're going to look at the ASX, which is the Australian stock market. I just drew in a nice simple ascending zone as well as a horizontal zone of resistance. We could put it right here. We have multiple resistance zones, break, retest, and then you get that huge rally, and it's still holding our ascending trend line. So overall, the ASX is definitely still moving towards the upside. We don't want to call it way too early and just say that we're consolidating, because we're definitely not. We're making higher highs, significant higher highs, and we held a higher low holding the ascending trend line. So overall, over in Australia, it does look more bullish for the overall stock market. And then this is Canada's TSX. Not super valid, but we see two zones at around 15 grand and around 14,360. And these are going to be the two supports that I'm currently looking at. We do see a nice little support with a trend line, 1, 2, 3 tests of the higher lows, creating an ascending support. We can also draw a series of higher highs, so you could actually put an ascending trend line there, but I'm definitely not looking for any melts ups. I'm just looking to see if it's going to continue the trend upwards, holding supports, breaking resistances, or if we're going to get any sort of sell pressure coming into the market. But it does look like it's fallen a little bit, but it's definitely way too early to call it a major risk-off sentiment. Like we saw in early March, it's just way too early. A lot of indexes and overall indices are still moving towards the upside, making higher highs and higher lows, breaking resistances, holding supports. Some of them are in pretty major levels of confluences for demand zones. So if it does break these key levels, that's a time to be a little bit more worried, but I don't want to assume that they will break. I want to see if it will break before I make that decision. All right, so now we're going to go on to two different asset classes. First, we're going to look at some oil, Brent and WTI, which is Western Texas Intermediate. So this is WTI first. Very similar. One's in London-based, one's in obviously Texas. We're making higher lows. We have held this key level of resistance kind of near where it gapped down initially before the major gap down, which is filling the gap. And if this is the second high, obviously this is a nice double top with the key breakout zone at around $34 for WTI. We got a mid-range zone, and I'm looking to see the price consolidate a little bit further. If it breaks this zone of confluence that we're holding as a nice minor level of support, as well as a series of higher lows, that would give me some indication, but I think that $34 range is really going to be that main zone that I'd like to see break in order for me to really validate that oil is going to move back down. So right now we're just in a consolidation. We don't want to fight the trend. We're holding supports and breaking resistances, although we do have a $40 key level that we do have to keep in mind that the price has not yet broken. Same thing with Brent, except it's at around $42. The overall structure is very, very similar in terms of the higher lows and the ascending trend line connecting those higher lows. And then you got a mid-range support zone that if it does break gives some indication that we could get a reversal, but that main zone that we're looking for is a completion of the double top, which is around $37, which is in confluence with the previous key levels of resistance indicated on the chart right there. Also, quickly looking at bonds here, we do see that people are getting into bonds. It's a risk off move. If capital is flowing into bonds, obviously there is worry, there is fear within the marketplace because bonds are not yielding any real sort of profitable investment potential. Like theoretically, it is 0.7, but what kind of person would really put money into something that's going to last 10 years that you're going to get not even a percent out of it. Really fearful, worried investors is your answer. So if this drops the zone of confluence where you get the nice level of support with the horizontal zone and the ascending zone, definitely going to be a risk-off indication. Very, very simple in terms of where it's going. Obviously, if you're looking at the larger zones, larger time frames, it just spells out fear, just spells out risk off, because over time, if more and more people are entering bonds, they are worried and they don't really have anywhere else to put it. And if they're putting money in bonds in places that yield like a 1.4%, 0.7%, that just shows you how aggressive and how willing global investors are to get some yet level of a yield, which is definitely significantly low. So that's going to be bonds. We're now going to go into gold and silver. Gold actually does not look too bad. It's still in the consolidation. I don't want to call it too early because we do have a high that we got rejected from very aggressively at 1764. We were looking to see this squeeze where you had the descending zone right here and the ascending zone right here, creating a nice ascending, a symmetrical triangle. Very, very clear breakout to the upside. Unfortunately, it did not hit our target, which would be the opening of the overall triangle, which we would be around here. We were looking for initially 1800 around there. Our first level of TP, but unfortunately did not get hit. So then we were thinking that does give us some level of information. The fact that we got rejected so hard made a lower high, and it just kept on falling, could not get the bids to come into the market. So we thought that the fact that there were so many indexes that were moving up, breaking resistances that looked really pretty bullish in terms of the reversal, that gold might not get a strong bid because overall equities is more of a risk on asset compared to gold, obviously. So there was a little bit of worry kind of in between here. We were getting an expanding zone, which isn't great. And there was a little bit of worry that gold was not going to push through. But recently, it did look like it's getting a little bit more buy volume. And once we broke the 1740 range and was able to hold above that zone and close, that definitely gave me a lot of hope, I guess, to some degree, and a lot of confidence in the potential for gold in the near term. So let's first look at the larger time frames. Let's go back all the way to the daily and look at this major zone. So the $1,400 area was right around here, and this was that major breakout we needed to see in order for gold to really break out of its 5-year consolidation, and it did that. It had a strong push to the upside, nice consolidation, another strong push, very well respected descending channel with an ascending trend line here, squeezing the price higher, and we got our major push. This was that liquidation event that we got in March that basically wiped out all assets across the board to the downside. Major recovery from gold, breaking the previous high, which the Nasdaq, the S&P, the Russell 2000, none of them did before gold, which is definitely a indication that there's a strong bid for gold overall. Held that previous high at around $1,700 for a strong new level of support right around here. Let's say 1680. And now if we're able to break this consolidation, which it looks like it is, that's going to be a very important zone for us to be looking for. So let's just move this up a little bit. And we can see that now we're making some higher lows, squeezing the price closer to the apex of this ascending triangle pattern. You got a key level of resistance with a series of higher lows. That is an ascending triangle, which in a bullish momentum market is an extremely bullish price action pattern. So what we're going to be looking for is, in an ideal world, to get a strong push breaking the previous resistance indicated, which is around 1747, and then retesting it for a valid new level of support. And once that gets held, that's going to be your indication that this ascending triangle is in play. And we also have a descending zone that was a previous resistance turning into a new level of support, creating a very small channel we can see right here. And once the channel broke out to the upside, we do have a breakout on our hands. We do have to, I would say, give enough room for the stop loss in case the price does come into this mini range right here, where we are rejecting off this resistance while holding this series of higher lows, holding the ascending trend line up, moving still, making higher highs and higher lows. So That's going to be the overall structure that I'd like to see on gold, but I'm still a little bit hesitant because it's, let me just get the snip. It's a little bit, to some degree, messy. Let's just get our snip here, because we do have this section right here, which I did not love. If we're able to hold this resistance all the way through, that would have been a lot easier for us to determine where to enter, but we did not get that luxury, so we're going to have to be a little bit confident in our trend lines. And we got 1 touch, 2 touch, 3 touch, 4 touch, and that turned into a nice level of support. And then we got a descending zone, 1, 2, 3. So that was squeezing the price closer to, deeper into the consolidation. And then we saw 1, 2, 3, and let's just delete all this. So we saw 1, 2, 3, 4, and then we saw this squeeze right here, and then we just poked out towards the upside. So it's a fresh breakout in my eyes, and if we consolidate within this zone, I don't mind. That's going to be a pretty decent opportunity to be looking for. I did like to see this hold, but unfortunately we got pushed down to the upside, but inevitably it did hold that zone. So the buyers are still present. That's no question. It's just, are they strong enough to be breaking this major zone of the roof of the consolidation? This is held on the 1 hour chart and the 4 hour, but if we are looking at the daily, I'd like to see the price break and hold above this 1747 zone on the daily. That would be fantastic. So that's going to be my analysis on gold. Let's just put it to the 6 hour. Actually, 4 hour probably is a better situation. And then now let's look at silver. So I'm not going to be bullish on silver until I'm bullish on gold. So because I'm a little skeptical that gold's going to be extremely bullish in the short term, if it gives me more validation that it is going to have a bullish move towards the upside just by getting more bids and asks in the short term, that would change my mind. But right now I'm still a little bit hesitant on gold, so I'm going to be hesitant on silver as well. But in that said, silver is holding up pretty well. Usually silver doesn't hold up as well as gold, but it's holding our nice level of higher levels of support, which is good. So you're getting higher lows. Our major levels around 1670. If we look back on the previous time frames, very important level to be looking at. And then overall, we are seeing higher lows, which is good. I did draw a descending trend line connecting the lower highs, and we have a nice little squeeze here where we have a very nice, well-respected ascending trend line connecting the higher lows. You got the apex right here. So now it's just a matter of if it's going to break to the upside or to the downside. If we are going to break to the downside, we do have a few supports to be looking at. We got our first support, which is resistance, support. So we could have some level of support here, and then you also have a descending zone that are connecting these supports with this as a resistance. So we got a few supports. I'm not really looking for shorts or anything, so I'm not really going to be trying to aim for like here to here or here to here, but those are just some potential places where demand is going to be that I just like to draw in some nice trend lines. But the major zone, if it does break this and this, is going to be around $16.70, somewhere around here. It's going to be the major level of demand that I'd like to see hold if I'm still looking for buys and longs on silver. And then quick look at the gold and silver ratio. Not a whole lot. We're just consolidating. We made a lower high, and we're seeing a lot of wicks to the upside. So if it does push to the downside, it'd be more bullish for silver compared to gold. Gold could still go up, but usually if this gold and silver ratio is really plummeting to the downside, silver is really bullish and gold is still bullish as well. But silver is the one to be in if you're going to pick the two, and that's mainly the way that we use the gold and silver ratio. So it does look a little bit weak. We made a lower high. Probably going to be testing this 95 zone. Does not seem too far off, especially we had such strong momentum after breaking the 108. It does make sense that we would be testing this zone. And if it doesn't, we have the previous resistance, new level of support, and if it slowly climbs back up, it wouldn't be really great for metals overall. So if that is the case, if this slowly climbs back up, gold probably has not broken the resistance and has failed, and silver has failed holding support, and it's now moving back towards the downside, towards the 1670-ish level of support. So we'll see how it goes. That's my overall plan. I'd like to see this hold, and if it squeezes towards the apex, I'd like to see gold go first, and then silver will be the sympathy play, or the play that I will do once I get validation from gold, because gold is usually the initiator of the major moves and major momentums that the metals market does provide us with. So that's basically the analysis for the global macro update. We went over equities, we went over oil, we went over bonds, and then now we went over gold, silver, and the gold-silver ratio. So what's next? We're now going to go over crypto, because obviously crypto is a part of it all. And something to note just in terms of fundamentals for crypto, in terms of my opinion, I still do value crypto and look at it in a risk-off sentiment. Meaning, I think in the long term, it will be extremely valuable, but in the short term, I think speculators are going to be looking at it as more of a risk-on instrument compared to a risk-off like the US dollar or gold. Over time, I think that'll switch, where people will look at Bitcoin as a safe haven to some degree, but in the short term, right now, I think if equities do fall, you'll see Bitcoin fall as well. So let's first look at Bitcoin on the large time frames. This is going to be the weekly chart, and then we'll dive into the daily, the 4-hour, and then 2-hour or 1-hour time frames. But the main time frame that I do like to look at is going to be the daily 4-hour chart. That's going to be like really, really good in order to assess where the next couple of days and potential week is going to be, just in my point of view. It's pretty hard to assess that when you're looking at a 5-minute chart, that's for sure. Just getting a nice ascending trend line there, connecting the higher lows, just like so. And then I'm going to get our resistance as well, just like so. And there we go. So we got our resistance, we got our support, and we're just squeezing here. Let's just get our snip to discuss what we're seeing here. We already talked about that symmetrical triangle, that large symmetrical triangle that we're seeing within the market. And let's get the thick. And then we know that there's a solid amount of sell pressure. There's a ton of sellers here. We know that for a fact. Doesn't mean that they're going to hold on forever. They will inevitably break and lose confidence. But for now, it looks pretty strong. We're getting a high, lower high, not a lower high because it did actually hit that high, but we're not able to make that break into a higher high. So it got rejected by the sellers, and we're still able to hold this series of lower highs if you're just looking at the candle closures. Yes, the wick was here, but you see the candle closure was much higher compared to this consolidation. So we see that there is a big wick that was a rejection. It wasn't a red candle, so it wasn't like a massive rejection. Like this is a huge rejection on the weekly. We didn't get that crazy of a rejection, but we did still see sell pressure coming into the market. And then what we're seeing on the weekly chart is basically just a consolidation with a large amount of sell pressure pushing the price between the $8,500 zone, which is right around here, which is the key level of support for the buyers, and then around 10K is a key level for the sellers, but it is a descending zone, so it's going to create a series of lower highs. But overall, it does look like it is respecting the $8,500 zone. Not a whole lot to talk about on the weekly chart, but there's a squeeze that is occurring right now, and that's basically what we're trying to identify if it's either going to go up or down looking at global macro. But my personal opinion and my bias is going to be a little bit more bearish, because overall in the equities market, it does look a little bit more bearish. So my opinion is a little bit more risk off, but I don't want to be too one-sided while this squeeze on multi-asset analysis is still playing out. So that's going to be the weekly. We're still seeing if it's really going to be breaking either resistance or support, but on the larger time frame, it looks like there is more sell pressure than buy pressure, and it looks like it is a volume distribution phase that we are currently undergoing. That's just my personal opinion. All right, So let's now look at the daily chart. We got a lot of lines, not too many, but hopefully you understand the key levels that we're looking at. Mainly, very simply put, the key level that we're looking at for a support is around $8,500, and the main level of resistance is around 10K. Let's say 99 to 10K. And we are holding an ascending zone of support. We have a type A, type B, type A, type A. It does look well respected with this wick, especially in this candle, gaining lots of buy pressure, pushing the price all the way up above the open of the candle, which is significant, but we're still seeing just overall not much buy pressure able to hold the price. You did get a little bit of a rally here where you saw a series of higher highs and higher lows, but it got massively rejected back down, and now we're consolidating lower than the previous consolidation before the huge smackdown. So it doesn't look super bullish. And if we're looking on the smaller time frames, we do see a descending wedge occur, but we really want to emphasize the larger time frames and didn't want to just jump onto this wedge and say this is a wedge, this is bullish if it breaks the resistance, because understanding the larger time frames is very important. So that's going to be the daily. Not a whole lot more to discuss. We're just right in the middle of the consolidation. I think we're kind of in no man's land. In this situation, in my opinion, you really do not want to be trading unless you're like really scalping and intraday trading on like a 5-minute, 3-minute, 1-minute chart, that you could possibly make money here. But if you're obviously a swing trader, there's not really a hope in hell that you're going to be making any significant profit. So in that said, let's now go to the 4-hour. We do see that nice descending channel here, wedge. Let's just take a picture and discuss it a little bit more clear. So we got the anchor point right here, and we got the previous resistance turned to support, 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 support for the support. And then you got resistance, and then you got this major zone of resistance right here. So overall, we do see, let's just get rid of all the stuff that we drew in to understand where this resistance and support came from and just draw it in right here. So this is that key descending wedge that we have identified, and we've already said that the highest probable situation is for the price to come back down to this support zone. Now, the reason why we wanted to really emphasize the larger time frames is that if you're just looking at this objectively on the 6-hour time frame, overall, that looks pretty bullish. We can see that we're making a series of higher highs and higher lows. We're able to hold a very strong level of support while also making higher lows. And then now we got to squeeze between the higher lows, which we've known in the past is able to hold the price and support it. And then we have a very bullish looking structure that we can see on the smaller time frame that is contracting the price action and the price movement, and we're probably going to get some level of volatility increase and some expansion in terms of the price movements here after this does break. But I personally am a little bit hesitant on entering long because of the fact that there is so much sell pressure and the equities market does not look great. But, if it does break and if it does pull back, we will be looking and assessing the stock market. It's not a 100% correlation, obviously. So if BTC does look fantastic for a long and the equities market does not look so great, I'll definitely take that risk. I'm willing to do it because overall the structure does look good with this well-respected descending wedge. If it does break to the upside, holds for a new level of support, we could be looking for a possible stop entry above the previous high where we got that retest candle. So we'll see how it goes. We don't want to enter too early. We want to assess the situation and really understand and try to understand where global macro investors are going to be looking for, where to put their capital to grow it or to keep it safe. So that's the risk on, risk off sentiment that we're trying to understand. So something to note also is this horizontal zone of support, but the main levels that we're looking to see break is either this resistance or this support zone. That was not very well drawn. So this support zone right here connecting the higher lows. You got a high, lower high right here, lower high, lower high, lower high, and you got a low, higher low, higher low, higher low. So this price is still squeezing in our I guess you could say symmetrical triangle where the resistance is a lot more descending than the support, but overall it is squeezing and we just have to see which way it goes. If it does move to the downside, obviously that's extremely bearish. If it does move to the upside, it would indicate a more bullish short-term opportunity that is present within short-term traders, but like I said, we really want to be looking at the equities market as well, because it could be a little fake out and then just an absolute slam down. We don't want to be too bullish just yet, in my personal view, because we did assess on the larger time frames that it does look less bullish, especially on the weekly, on the daily. It doesn't look super bullish in my personal view. Let's just draw in our descending zone on the daily as well, just like here. So that's my view of BTC. Not really going to dive in too much more. We will look at the BTC Dominance and the Total 2, which is the altcoin market, and then that will be the completion of the global macro update. Not really going to get into currencies or anything, but we did look at a lot of stuff, so that gives you a really good idea of what to be looking for in different circumstances. First thing we're going to look at is the BTC.D, which is the BTC Dominance Chart, and it hasn't really done much because BTC and a lot of the alts have been a consolidation. Totally makes sense. Usually alts do not absolutely rip or dump unless BTC is moving either up or down. Usually that is the catalyst, unless there's like major fundamental news, obviously that'll give a lot of opportunity for price movements, but usually they don't just rally for absolutely nothing. So in terms of the Bitcoin dominance, we're just consolidating. We are still holding the series of higher lows, but we are holding the descending resistance as well. So we're creating an expanding pattern in terms of the 2-day chart, which is not great, but if it does hold this green rectangular ascending zone, overall BTC is collecting more of the market cap, which is bearish for alts. You do not want to be in alts if Bitcoin is collecting and taking more market cap and getting a higher percentage. If this is plummeting, you know that overall cryptocurrency investors are all right with more speculative investments and have a very high risk tolerance. So in the realm of crypto, if BTC dominance is going down, it's an extreme risk on sentiment, meaning that overall people are willing to speculate in more volatile cryptocurrencies. You're going to see alts absolutely fly. Bitcoin will be doing very well, but alts will be the place if you want to see massive gains. But you do have to make sure that you always have your allocated amount in BTC and Ethereum, because these are going to be your longer term plays that I think are going to be a better choice. But alts will be absolutely booming. So if you're a trader, if you're a short-term trader, and you're able to utilize TA, risk management, trade management, and proper psychology, you can capitalize on some great opportunities. But until that happens, I'd mainly suggest sticking to BTC, Ethereum for your overall trading, because they have higher liquidity, they don't have much slippage, you can trade them on different exchanges, and I just personally think that's going to be the best way to go about doing things. But obviously everyone in the world trades a little bit different. So that's going to be the analysis of the BTC.D. And then this is the weekly chart of the Total 2, which is the total cryptocurrency market cap excluding BTC. And we do see that it is forming a nice drawn out symmetrical triangle. We have a series of higher lows and higher lows right here and lower highs, squeezing the price towards the apex. We do have a mid-range zone, and we're right at the resistance. So in the overall structure, if we are going to get BTC to move to the downside, this is definitely going to fall back down, and then the Bitcoin dominance chart is going to move up. So once we see those key breaks, that is going to be confirmation overall. So when we zoom into the smaller time frame, we know that there's resistance here, but we know that we also have a support right here. So if we break this previous resistance, new support, and create a new level of resistance again, what does that look like? That looks like a head and shoulders if we just form a nice little zone right here. So that overall is a potential resistance structure, and that means that we'd be looking for short opportunities, exposure in downside moves in the cryptocurrency sector. It doesn't have to be BTC, because overall, if Bitcoin bleeds, alts will bleed harder, which will create a better risk-reward parameter. As long as you're able to manage your risk, alts generally will fall further. So that's going to be my take on the crypto market. BTC is going to be definitely something to watch, in my opinion. We already talked about the squeeze, and in my opinion, there's not a whole lot of actionable items to do Right now, I'm a little bit more bearish in terms of the structure on the larger time frames, but we do have to keep in mind the smaller time frame descending wedge that is forming on BTC. So that's my global macro update. Hopefully you enjoyed it. If you have any questions, drop them in the comments section below, and I'll be sure to read them all and answer any questions that you have. Hopefully you enjoyed it. Hopefully you got something out of it and you had a great weekend. And let's just make this week another great trading week. Thank you very much for watching, and we appreciate all the views and everything that you do provide, and the engagement in the community. And if there's anything that you think that we could do better that would create more exposure for us, that would let us reach more people, or anything that would help you guys out that you would enjoy more, definitely don't hesitate to write them in the comments as well, and we'd appreciate any feedback that you do have. So thank you very much for watching, and until next time, have a good one, traders.